Hey everybody, Preston Brent here with another weekly edition of our Financial Market Weekly Roundup. This is through the Friday ending September 26, 2014. Interesting week, folks. What I've got on the screen here is a daily chart of the E-mini S&P 500 futures. You can see I got a couple of things going on. I've shown this for quite some time. We're still in a very strong uptrend. But we're starting to pause for the cause, I guess is probably a better way to say it. You could see right at that point there in Q4 of 2012, we were getting more aggressive, going bullish, and our members and myself as well. We were bullish, but we are very extended from where I would feel most comfortable being right now with the valuations. Even though the valuations are not like they were in the dot-com bubble, I think they're a little bit rich. But let's just take a look in more detail at how this thing is shaping up. You could see with this recent pullback right here, we had a couple of different things going on. We had two different bearish divergences working from this pivot high to this pivot high, and then from this pivot high, if you can see it, to that pivot high right there. I'll zoom in just 1 second. But we had a really good play to the downside, or at least we had an early warning that this was going to happen. Again, the S&P E-mini S&P 500 futures is a daily chart. Now, if I zoom in, you'll see we had a couple of quick reversal days here, and this is just symptomatic of the market really trying to figure out where everything is going. I will say that we did very quickly recapture the 50 EMA on Friday's close. I mean, we closed towards the high of the day, but we're nowhere near where we were when we started this huge sell-off and after this huge rally. We sat just below the 50 EMA on that candle right there. Then we had this huge rally on Wednesday, and then we gave it all back up on Thursday and actually edged lower. And then we had another strong day Friday. But if you'll look very closely at these candles, we're making lower highs and lower lows, which is why I drew in this channel right here. Now let's zoom in. I'm going to show you a little bit more detail on this channel here, which we got to be. I'm going to show you some key points coming up this week that we got to watch very closely just to see where this market's going to go. As always, I love pairing the 2-hour with the daily chart, the daily time frame, 2-hour time frame and the daily time frame. You can see right here on this 2-hour chart where everything is rolling right now. We come down and we hit this our support point very nice here and forming an Elliott wave 5 from this 3, 4, 5 pattern. Worked out very nicely for us. In fact, I had this out here and I told our members that right in this area here, probably the center point of that line right there, I think I had called it 1958, and we came down just slightly below it, maybe a point or so, but that was about it. But we moved up very high, but all we're doing is coming back up to the top of this downsloping channel here. So this would really, we need to focus Monday and Tuesday on a couple of key levels. The first one's 1978.25. That would be this area right here. This would be our S1, our first level of resistance, the 1978.25. Now, let me draw the 8 the right way, and then the 25 right there. So in looking at this, obviously it's not exactly like this. It's a little bit of a zone, about a quarter of percent above and a quarter percent below, something like that. But it's a very tight zone here. We need to clear that area, then we need to clear that downsloping trend line, and then we got to get some escape velocity to get up here. Our S2 level is very clear. It's this prior pivot right there at 1992.50. So these, and that's our foreleg, which is a counter trend on this 2-hour chart. We've got to be able to take these out, guys. If not, we're going to come down and challenge that and then probably go down lower. If on Monday or Tuesday we get up in this area and then we start to roll again and we come back down into this channel, we're going to come back down to this 1968.20. I suspect it will not be able to hold us, all right? And then we'll just come right back down and test this area. Should this break, we're going to get a much harder, rougher week ahead of us should this area break here. Okay, so these are just some things zooming in on the E-mini that I see here. So even though you can see right here when we had this huge move up right here, and everybody's feeling a lot more comfortable. We were slowly making lower highs, right? We didn't really clear this thing, and then boom, off we go to the races. Right down here in a 2 hour time or 4 hour time frame, boom, we were hit down to the lows. It only took 2 bars to get there, and then we just kind of languished there until we finally caught some wind on Friday and just managed to get up just a little bit here. Okay, so don't get too giddy on Friday's movement. We are still moving in that direction, so I am still neutral to slightly bearish so far. Overall, longer time frame, I'm bullish, but as I told our members, a lot of the market participants, the big money's going through some reevaluations, or they're going through new valuations on the markets based on earnings. Now, I want to remind you, we got our earnings season for Q3 coming up in the next couple of weeks, and it's going to kick off in earnest, and it's going to give everybody readings into Q1 and Q2 of next year. That's where everybody wants to see. We've also got the big holiday spending season coming up in November, October and November timeframe. So big money's going to be watching what consumers are doing and how they're spending going into the holiday retail buying season. That's about where 60-65% of retail profits are made. And in the U.S. markets, the retail consumer spender is 70% of GDP. So understand we got some potential speed bumps in the road should they not come in where we need them to. You're going to see the valuations, forward guidance of the PE come down of the S&P, and then that's just going to drop the stocks. Now, if we go back out to the daily again, okay, you can see right here on the daily, we're just barely above the 50 EMA. But we've just started this drop, okay? We just started the drop. Now, notice we did the same thing here, and then we bounced up higher. But that could be kind of a fool's errand here. And then, boom, we come down and take out that key area like we did. And then this is just going to start working its way down to the bottom of this upsloping trend line right here. Should it break, then we're going to come down and challenge this 1890 area fairly quickly. As you guys know, just how fast the markets can go down. It's just selling generates more selling. So in the overall scheme of things, near term to midterm, I'm more neutral to slightly bearish until I'm proven otherwise. Longer term, I am bullish. I've instructed our members, and me as well. I'm only deploying about 40% of my portfolio right now, just kind of standing on the sidelines. Ideally, I'd love this thing to fall much lower and then just start picking up some really good stocks. But that's kind of where we're sitting on the E-minis. The other one that is kind of our early warning signal is the RUT. The Russell. This is the Russell futures. As you can see, all these lines on here, I left them in here on purpose. I know it's rather busy. But let's just zoom it in a little bit. And I'm going to do it again for you from last week. But you can see here, this box right here is the entire year of 2014. Okay? You can see we entered 2014 right there. This is where we are now. You don't even need a ruler or a gauge to eyeball this to know that we are going in the wrong direction for 2014. You can see just how volatile the Russell has been. This is small and mid cap. We're testing both the highs and the lows here many times, all right? And then these two here have been internal. We came right down and tested that line again. I think if we take this out, we're going to come back down in this area here and test as we've done so many times before. If this breaks, then watch out, because we're going to go for a ride to the downside. It's going to pull all the other markets down. Money has not been flowing into small and mid cap this year. It has not been. It's been in larger cap. Now, that's going to have to change, because I don't think we're going to be able to go much higher without participation in small and mid cap. All right? I just don't believe that's going to happen. If we look at Nasdaq, Nasdaq, a completely different chart. Again, this is 2014 right here. If I were to box in 2014, let's just put it in the box right here. You can see right here, we entered 2014 right at that level there. We're right at that level there. Again, just the opposite of the Russell. We've got one of these kind of things going on like that. Okay, not a bad year. We've had some tests of some key lows down here in 2014. But you can see that we've moved up quite nicely. Now we're starting to give some of it back. You can see that key level right there, just north of 4,300. I think that is going to be a key area for us. Should we really break down? It's 43.24. We're sitting just north of the 50 EMA here. Okay, so we've had some we had discussions in our group. We knew that this was coming. Just based on the indication that we saw on the charts. But this is where we're sitting right now with the major indices. If I look at the treasuries, bonds has been really interesting. In anticipation of higher interest rates, it's done one of these numbers right here. It's been selling off. We hit the 200 EMA, hit a key support zone, that little zone area there, and then we're bouncing up really hard here. I think the upside movement is going to be limited. It looks like it's trying to form a 3-4 leg, which the 4 would be up here, and then it would come down, break that area, and have a 5 somewhere down in this area here, or perhaps even lower. So right in this area here, I would be a seller of treasuries. I would not be a buyer. And of course, playing this to the downside, you can also play TLT, which goes in the same direction as the 30-year bond market. That's where I'm looking at bonds right now. Another really interesting one that we're long, we've been long in this thing, it's fun, is the US dollar. This thing has taken off. Look at this chart. If I step out a little bit, just put some perspective in it, you can see on this weekly chart just how we've moved out. We had this key breakout. Again, this is a weekly chart. We had a key breakout right there. We could get a little bit of a retest, but if not, we're coming right up to this area here, 88,495. All right, that would be a target area. And this is a rocket shot. Why? Because the U.S. economy is stronger than most other global economies, but more important than that, the FOMC is talking about, and the Feds are talking about possibly moving forward the date that they raise interest rates in the U.S. And we've been flat 0 to 25 basis points since 2008. And that depressed the U.S. dollar. Well, guess what's happening now? The dollar is probably going to come up and challenge this area here. So we want to be long the dollar. That also hurts commodities. Puts downward pressure on oil, puts downward pressure on gold, things like that. And speaking of gold, let's take a look at it right here. You can see the gold chart. We are down at some key levels here. You can see, again, this is a weekly chart, but I'm doing it stepped out just so that you can see just how strong this support area could be. This is kind of where we're headed in gold right here. Should it break, then we're going to go to a long-term Fibonacci 1132, 50% pullback from highs. Now, this goes back years, the Fibonacci pivot high and pivot low. But we're sitting just north of that right here. I think gold may arrest its fall somewhere down in this area here, somewhere in this, and it's a wider zone. And gold's hard to predict right now, but I think right in this area here is kind of where gold is going to settle. And then we're going to start a trek upward, although now is the timing's not right to be long this one. The other one that I think is going to be even have greater potential as a percentage return on capital is silver. This is a weekly chart of silver. You can see on this weekly chart of silver, we are right there, my friend. We're right at that key support zone. We just broke it just a little bit. But I think the risk of an upside move is greater than the risk of a downside move. You can see that bullish divergence that's set in. Now, it may take us 3, 4, 5 months, sometime in the spring of next year for silver to be back up in this area. But I do believe it's 17.65 now, but I do believe sometime in early summer of next year, it's going to be north of $23 an ounce for silver. But right now, we're just kind of hugging right down in this area here. So that's silver. The other one that's been pressured down because of the stronger dollar is oil. You can see right here with oil, here's this downsloping trend line. This is a weekly chart, by the way. You can see these support zones, support and resistance zones. Let me just zoom into a daily so that you can see a little bit better. Here's the daily chart right here. You can see where we're sitting. You can see this very tightly banded channel right here. We're having a little bit of a reflex bounce here. In fact, I'm playing just a little bit of a near-term support with a bull put spread in the futures market. I'm expecting it to kind of meander here. If it breaks here and goes down further, then we're going to end up down here very quickly, somewhere around $85, $86 a barrel. We're getting some of this bullish divergence here, so that would tell me that the price action seems to want to inch a little bit higher. In fact, Friday the markets moved up. Oil moved up 82 cents a barrel. So let's kind of see how this thing works. But if it breaks this area here, it's going to go lower pretty quick. Gasoline, everybody probably notices gasoline at the pumps is cheaper. Well, as you can see right here in gas, I can put these support points on here, and you can see how it's hit it nicely, right? I mean, you can see just kind of where we're sitting right here on gasoline. This is a daily chart. Again, just like oil, we're in a little bit of a reflex rally here. There's a 3-leg. It looks like it's trying to kind of move to a 4 counter trend, and then it's probably going to come back down and give it all up before it decides what it wants to do when it grows up. But right now, near-term oil, gasoline futures is probably neutral to slightly bullish. And that is kind of how we're sitting on that one. Now, the other one that's just gotten decimated is soybeans in the agricultural market. Let me just back this out to weekly, and I'll show you. Really just been killed. You can see right in this area here, this is a weekly chart. So we're going way back to 2007. And soybeans gave it up in literally a couple of months, about 3 or 4 months. It just boomed right from the high up here in May of the summer all the way down to right here. It's just been in anticipation of a huge crop coming out. Once the crop is picked and put in silos and delivered, I think you're going to see some consolidation in soybeans. We do have a 3-leg here that would suggest that we're going to probably get some consolidation and move to a contra 4, somewhere up in that area there. I've gone out of the money, and I'm playing a bull put spread just for the time being, but I'm watching it very closely. It could go lower, but you can see just how soybeans has really given it up on the daily chart. Okay, I mean, just look at that. That is ugly, ugly, ugly. And we're now down in this support zone right here. It goes all the way back to 2007. So let's see how this thing plays it out. And then one other thing I wanted to show you, which I kind of glanced over before in the currencies, is the euro. The dollar strong. What does that mean for the euro? Very weak. You can see the euro is way down in this support point right here. And we haven't been back in these areas since last year, and it goes all the way back. It's been a very good support point. The last time we broke it was back in 2012, handedly. So I think the euro is going to go lower because Mario Draghi in Europe has no choice. He's got to do some more stimulus to help Europe. So any rally in the euro should be sold. The British pound, well, you know, it's sold off a little bit. It's given us that, you know, kind of a head fake here on the pound. We played the pound bullish all over here in anticipation of rising interest rates because Britain, there's speculation, and probably so, that Britain's going to raise their interest rates before any other major power. That's going to be bullish the pound. However, it really started to take a turn for worse the minute polls started coming out showing the Scots wanted to vote yes, they want to secede from Great Britain. But the vote came out no, they're going to stay in. You could see that little bit of a counter trend rally on that no vote. But now it's starting to give it back up again because there's now a realization that they got a lot of work to do to give Scots a lot more than what was originally out there. So you're going to see some more sell-off. Ideally, I'd like to see the pound get down in this area here, and then I'd be more bullish the pound. That's a little bit about where we're going to be there with the pound. So anyway, folks, that's it for the update. For our members, I will see you tonight in our Secret Trader session at 8 p.m. New York City time. If you're not a member, I'd highly encourage you to come on in and check us out. We're having a fun year. As we seem to have for the past 4 or 5 years. We've done very well since the group's been formed. So come on in and check us out. Otherwise, have a really great weekend, everybody, and I will see you guys later. Bye now.